presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to John in Orlando. John, what's going on, brother?
Good afternoon, Tom. How are you?
I'm doing great, man. Yourself?
Good, good. I'm going to tell you, I've been listening to you since your radio days back in '99. Appreciate what you guys do. But what I really enjoy that you brought back Tim Ward. This guy is as smart as a whip.
I am so happy for that feedback.
Yeah, because he's one of a kind. He's got to be the #1 market timer. I'm telling you, it's like he calls it really, really good.
He does. I really appreciate the feedback, man.
Yes, yes.
Now, Tom O'Brien.
What's going on, folks? This is Jacob Shoup filling in for Tom O'Brien. He will be back tomorrow. Let's take a look at what we got going on. All right, first thing, CPI was obviously higher today. We'll take a look at that, higher than anticipated. The 10-year Treasury rate right now is 4.17%. We have the ES Mini trading down about 2 percentage points right now. The Russell off almost 5%, trading down 4.6%. NQ's down 2.18%. The Dow futures down roughly 2% as well. The gold contract on its way down, trading at 2,005 right now. Obviously had a few days of, well, let's just say basically today, huge volume to the downside here. Pretty impressive on that. Take a look at silver, down equally about 3%. I'm going to take this off the 2-week. Looking at copper, that is also down, although moderately, trading down 0.52%. And then crude oil, we're actually up today, trading $77.72 a barrel. That's on the futures contract. We take a look at the dollar. We had been pretty consistent at that 104 level, and it looks like we're making our way up at least to touch the 105 level in the dollar. Meta down 166 today. Let's take a look at the SPY as well. Trading down about 2%. We're at 491. If you were in the den, Tom was also talking about the SPY. He says basically 49 to 42 in the SPY is where, as he says, the fat lady sings, and we'll see what we can do at that pullback level. Would be kind of interesting to see it pull back to that, because I feel like that would be a perfect spot to get in. I mean, we've been making all-time highs consistently. This is on the idea that we're going to see some kind of rate cut at some point this year. Obviously, CPI was pretty rough, and let's look at it, right? Because I had been speaking, I think, in the beginning, at least of January, there was some news that would suggest volatility in energy prices, right? Which is not included in the core CPI, but still would have contributed to a higher CPI. We actually didn't see as big of a jump in kind of crude as kind of I expected, right? As the days went on, you saw a lot of stability, of course, trading up like 77 now, but we were hanging around that 72 level in crude oil. And actually what really contributed to higher CPI today was the core. So let's take a look here and can talk about it. All right, so obviously food and energy get cut out of the core CPI just because it's volatile. Really, your big moves here were food away from home, up 5.1%. We spoke about that a little bit, especially when we were talking about the comments that the McDonald's CEO had made, right? That, prices are just going higher and we need to really figure out what to do about that. Limited service meals and snacks up 5.8%. That's a 12-month percentage change. All these figures are, okay, so we had some movements up in these. Natural gas piped actually down 17.8%. Gasoline, all types, down 6.4%. Now, this is, of course, on the 12-month. And then fuel oil down 14.2%. Over the 12-month percent change, one of the highest contributors to this kind of weighting that we saw today was shelter, up 6%, rent up 6.1%, owner's equivalent of rent residences 6.2%, and then what blew my mind really is motor vehicle insurance. And now I think at the end of last year, we were really talking about that quite a bit. But even on my end, I got hit twice on increase to my premium because I moved and just my age as well. It's pretty insane. So, if we take a look at we had going on, it was 3.1% total, and then it's actually something like 3.4% on the core, which is, intense, right? So, I mean, you have this like actual, pressing issue that's not just due to volatile products. It'd be interesting to see, you had Powell said at the last Fed meeting that they need to wait to gather more data before they can make a decision on rate cuts. It for sure wasn't going to occur in March or any time before then. And, again, I think the problem is this pushes out the horizon, as I've been saying, right? So what does it mean for the market making these all-time highs? I mean, I think you're seeing this in the pullback currently, right? And people are going to try to probably position, and I say people as in like these large investors, probably have to kind of figure out how they want to pivot themselves on this. Speaking of things that really weren't super hit in any capacity, I mean, NVIDIA is only down 0.82% today, still cooking strong at 716. I want to see what ARM's doing because I haven't checked it this week. So down pretty significantly as well at 17.84%. You had big investment from SoftBank on this. That really contributed to the increase in the price. That can be worrying sometimes. But what I would say with ARM, too, is this is the only company that's making these chips, right? And this is the stuff that goes into your phones. I mean, that's obviously a pretty significant drop, of course, following a pretty significant rise, and we're still shaking out far above where we're at, trading around this $73, $74 area, before this shoot up and then subsequent pullback. I'm going to be following this for the rest of the week and kind of seeing, what the market wants to do with that. Anyways, pretty kind of insane movement in the market today. You're talking a little bit about that car insurance premium, because I was curious about this as well, and there was a bunch of articles going on regarding all of it. So let's talk about this. American motorists are spending less on fuel than a year ago, but any savings are likely being basically absorbed by soaring car insurance premiums. Although prices at the pump in December were nearly 2% lower than a year ago, auto insurance rates jumped 20% over that same period. This is, of course, from that Labor Department data. That was released on Thursday of last week. Insurance coverage far outpaced the rate of inflation, rising 6 times faster than consumer prices overall last year. And that was the thing. When the agent called me, he was like, hey, man, yeah, it's just like inflation and you move, so you're getting hit twice. But, I wanted to kind of give him a hard time, even though it's not really his fault, and be like, well, I'll go look somewhere else then. But they're not competitive. I mean, for the coverage that, I need and everything, and you're not going to get anything lower. And it's kind of a shame with that. Several factors are driving up the cost of car insurance, including lingering issues from the pandemic. Vehicles are more expensive and costlier to repair. And then inflation also drives up the cost of computer components and other parts required for repairs. And this is only going to get more complex, right? These additions to different kind of like edge computing on the car. I mean, you're going to see a lot of weird things in the coming years on that. I could talk a little bit about that maybe at the end of the show. Anyways, also a shortage of mechanics is a huge thing as well. Folks, stay tuned. We have Basil Chapman on today, and then that's going to be followed by Tim Ord. I'm sure both of them are going to have some pretty interesting things to talk about regarding today. So, folks, stay right there, and we'll be right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Cakestat's Tiger Forex Report. Teddy Cakestat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you ready to take your trading to the next level? Introducing Tom O'Brien's award-winning newsletter, Market Insights, your key to successful active trading. Tom O'Brien, renowned for his expertise in the financial markets, has designed Market Insights to be your daily guide to profitable trades. Tom publishes his daily Market Insights newsletter every market day before the market open, along with updates when warranted. Stay ahead of the game with Tom's real-time analysis and trade recommendations delivered straight to your inbox. Whether you're a seasoned trader or just starting out, Market Insights provides the edge you need to navigate the markets with confidence. Ready to join the ranks of successful traders? Head over to TFNN.com and subscribe to Market Insights today. Don't miss out on this opportunity to supercharge your trading results. Market Insights comes with a 30-day money-back guarantee for all new subscribers, so you have nothing to risk. Don't miss out on this opportunity to revolutionize your trading game. Head over to TFNN.com right now to join the thousands of traders who have already experienced the power of Tom O'Brien's award-winning newsletter Market Insights firsthand. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. This is Jacob Shoup filling in for Tom O'Brien. Again, pretty a wild market today. If we take a look at what we have going on here on the screen, this is the opening call newsletter by Basil Chapman. Check it out, folks. Again, very thorough, constant updates, even as a Saturday update for subscribers as well. This is a 30-day money-back guarantee for all first-time subscribers. That's how much we think you're actually going to like our products. So come take a look. Again, you also have all of the webinars that Basil has done, and these can span from an hour or two and are very educational. Basil, how are you doing?
I'm doing well, Jacob. How are you?
I'm doing well, too. What do we have to look at today? Obviously, a lot of news just came in and pretty consequential. So
let me just actually go to this. In my opening call for subscribers, every day I'll show the Dow chart. I give an analysis. It really applies to the other indices as well. And I give my Traders Corner, which is just a list of all the positions we have, what I'm looking for, quick synopsis of where we are and what we would like to add, what are market indicators, etc., and then all the different positions we have. So I'm just showing, this is, forget about all the stuff on the side. Basically, this is a screen I use with these three panels, and it shows the Dow. And what I said yesterday was that there's a technique that I've developed over the years called the Chapman Roman candle. Basically, it's a long wick with a body, and sometimes it's a red candle, sometimes it's green, but the principle is the same. If it occurs at the top, watch out if you take out the low. If it occurs at the top and the price holds in that wick, the long wick, for about 60 minutes, there's a good chance you're going to test the high. Well, you can see this candle. So we've been short the Dow for about 2 weeks. No, actually, the last short was about a week ago, and we've held that short position, and that's obviously doing well. So I'll show the daily chart and the 120-minute chart. In the Chapman wave, we're always looking for the fourth highest peak. We label them peak A is the first, peak B is the second, the higher peak is peak C, and then peak D. That's where other things can happen. You can see we've got that peak D right there. Look at that sharp pullback. Dow's down 743. It hit 38,927 yesterday with an all-time high. This is the same thing, but here I have some technical indicators which we use, and here's the 120-minute chart. It too made a peak D. So that just said to me, there's a really good chance that they could have some kind of a pullback. How deep a pullback? Well, what I was looking at is for a couple of weeks now, actually it's more than that, but essentially over the last 2 weeks, and especially this past week, I've been talking about round numbers. I've been following round numbers. A round number is if the price, I used to follow this on the Dow when the Dow closed unchanged, which is very rare. It did that back in 1987 when there was it made a top, and I was hand charting at the time, and then it pulled back, and then it had a rally, and it had an exact 0% change. And I said, if the market's down 60 points or more, that was a lot in those days, tomorrow this is a really serious decline. So I've learned about the 0% changes. And so yesterday I was talking about the different numbers that we were looking at, but there's a one that really struck me. It's called the RSP, and that is this is, you talk about the the S&P 500. Well, this is this S&P 500 equal weight ETF. So to get an index to have a round number, it means that all 500 have to do something to get that round number. It is so rare. So yesterday, the S&P equal weight made a high, all-time high of 160.53. And as I'm looking at it intraday, I see it had 159. Look at this, 159 was the open price, 159.00. It went up to 160.53, 1.5 points higher, and then it closed just a little bit lower than that, and today is trading at 156.18, down 3.83, and that just said to, and it was a leg F in the weekly chart. So I'm looking at this and I'm saying, all right, this is something serious. So we actually, for subscribers, we are short the S&P. Even more important is when you're looking at, let me just find, look, ARM. You were mentioning ARM a moment ago. Yep. ARM is an incredible company. This is in the semiconductors. It made a round number. It's tootle, just messing around in the 70s just a week ago.
Right.
It screams up to 164.00, round number high yesterday, trading now at 121. These things don't just happen in a vacuum. SMCI, another, and yet the semis are actually holding not too badly today. So right. I'm watching things very closely. So yes, this is super micro company semiconductors. Come on, let me get this. There it is. So look what happened. It screams. This is the same thing. Just a week or two ago, it's down in the 400s. It runs to where? 810.00 yesterday. And look at all the round numbers. Even today, it had an 800 high. So I don't take these things for granted. I've been studying them, the round numbers, for years. And the number, I mean, you can even the GBTC, which is the GBTC is the
Bitcoin Trust.
That's the Bitcoin. If I can just get this to go, there it is. That had a 43 round number yesterday, and it's trading at about 43.86 right now. So when you see, it says to me that fund managers are so nervous right now that they have there's a degree of hysteria that they've just got to grab everything they can. I mean, even I had look at, here's GGG. Who knows about GG? It's called Graco. It's in the fluid management products packages. That had an 88 round number, and now it's trading at 86 at an all-time high. So I take these things very seriously. And I'm not sure it means that everything's going to go down very sharply, but look what we got today. And it just says to me that fund managers have a degree of hysteria, and they're grabbing whatever it is, just putting in the round number, getting in, getting out. Some of the stocks had round number highs and round number lows over the last 2 days. And that just, I don't think I've seen this until, maybe I had seen it back in 2000 in the dot-com bubble, but I am saying it's something I respect. And I think that there's going to be some kind of volatility here. But unless the SMHs, the semiconductors, which are trading only down 5.5 at 197, unless they really start to tank, this could just be what's a well-needed respite where there's a breather. But I am taking it quite seriously because It's so rare to see this number. Any stock that anyone mentioned over the last 2 days, I pick it up. There was one that just a moment. Oh, you mentioned STLD. You're always looking at STLD. Well, guess what?
Yeah.
It had a high yesterday, but the day before it had 125 round number. Yesterday's high was 126.13. It's trading at 117 right now. So they don't just happen. They don't just happen in a vacuum, and that's just telling me be a little careful here because there's a consolidation unfolding. You've got to take it seriously. And the dollar is running. We've been long the dollar for a while.
Absolutely.
The dollar's doing very nicely.
Basil, thank you so much. Just fantastic as always. Folks, seriously, come and check this out, the Opening Call newsletter. Basil, thank you so much.
Thank you, Jacob.
Take care.
Have a great day.
Folks, stay tuned. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
What's going on, folks? We just finished the interview with Basil Chapman. If you missed it, make sure you check out the archive afterwards on our YouTube channel. With the SPY trading down almost 2% right now. ES trading down about the same. Russell down 4.7%. The VIX is actually up 22.3%. And no better person to talk about this with than Tim Ord of the Ord Oracle. Tim, how are you doing?
Good. Thanks for having me on again.
Absolutely. We're happy to have you. What are we taking a look at today? You got a lot, huh?
Yeah, we got a lot. Actually, there's a chart 4. I sent you another chart.
I got that one. Yep.
Chart 8, okay.
Yep.
That Chart 8 takes in place of Chart 4.
Perfect.
So anyhow, let's give Chart 1. This is kind of like I've been showing this chart probably for the last month or better, but it's the summation index again. We got a bullish, bullish confirmation of an intermediate term trend when this NYSE summation index falls below minus 700, which it did back in October 27th. And within 2 months, it should rally to plus 1,000. And on December 27th, exactly 2 months, it did have a plus 1,000. That predicts the next 12 months in general. It could be longer, but in general, should be an uptrend. That doesn't count, there'll be some minor declines along the way. And what I'm looking at today is one of those minor declines. So let's kind of look at that, what's going on. Page or chart 2, and this is the daily SPX TLT ratio, and so that's the second window down from the top. The RSI is a 10-day RSI instead of a 12 or a 14-day RSI. Just seems to work better. And yesterday I put it in my market letter. This gets up around 70. Normally you get short-term highs, and all those blue lines across there are times when the RSI for this ratio got above or got at 30 or 70, plus 70 or higher. And yesterday I forgot what it was like 68 point something or almost 69. So that was kind of a worrisome sign, even though the market could have pushed higher a little bit more. There's kind of a worrisome sign that we're due for some sort of correction, and obviously that today, and I warned that in my market letter, but I don't think this is anything really to fret about. And the reason why, if you look on chart number 3, you brought the VIX up, so that's what we're going to be kind of looking at here. The acceleration, basically the market, there's different ways at top, but bottoms are a lot easier to pick than tops. And what's going on right now is probably a short-term bottom. Is it today? It's a good chance it could be today, but it's not a long-term bottom. It's just a short-term bottom. And what I do is measure the acceleration of the VIX. So there's different ways of panic. Panic only comes at bottoms. You don't get panic, you don't have a bottom. So what you really want to see right off the bat is panic in the market. And you can measure it with the ticks, you can measure with the trend, that's TRIN, or you can measure with the VIX, and I'm sure there's some other indicators that also panic. But I like those 3 indicators to look at panic. And panic only forms at bottoms. So do we have panic in the market right now? According to the VIX, I look at the acceleration of the VIX, how fast that VIX moves. And so I got an RSI hooked up to it. I have a percent volume or percent Bollinger Band hooked up to it, which is the second window up from the bottom. And I have a rate of change, and this is the 2-period rate of change. And this is an hourly chart, so it's a short-term chart. So we did get when I made this chart a couple hours ago, the RSI is almost 90. So anything above 70 it does show that the VIX was accelerating at an unusually high rate. And all those times in the past, that's those red lines across the chart. At other times when the VIX accelerated really fast, where the VIX or the RSI, or the 14-period RSI for the VIX got above 70. And also the percent Bollinger Band did get above 1.25 today. So we got a lot of panic in the VIX. And so this is an hourly chart, so it predicts that we're probably at some sort of short-term low. Let's go look at chart number 8.
Yes.
That's that one to replace this chart number 4. This is kind of a similar indicator, but it's on the daily time frame. So you're looking at a daily acceleration of the VIX, and you're looking at an hourly acceleration of the VIX. So the bottom window is the RSI 14 for the VIX, and it has to get above 70 with 70.44 when I did this chart. And the next chart above is rate of change. It's 2 periods on a daily part, and it has to be above, I think, 30. It was actually 29.62, close enough. And the next higher window is percent Bollinger Band, and it has to be above 1. And when I did the chart, it was 1.37. But you only need 2 of the 3 indicators to reach bullish levels, suggesting that you're near a short-term low. Well, we actually had 3 of them here. The RSI, the 2-period rate of change, and the percent Bollinger Band. So this is probably, and this is expiration week. Normally you get normally expiration week, the week before expiration week, you get the weird moves. And it's kind of unusual to get a weird move during expiration week, but I think we're getting it here. So I do think we're probably at a short-term low, but it's not on the bigger time frame. If we end up down around 2% today, 1.82 as we're talking, if you get around 2%, declines normally come in clusters. So what that means, if the market does bounce here, which we think it will because it is still expiration week, and we at a minimum amount get back to the gap area, if not get back to yesterday's high. And I think that may be a worthwhile top. I'm thinking back on January 31st, we had a selling climax at around the 482 area. And I was thinking we're going to see that test of that selling climax, which is, again, January 31st at some point, probably this month. But I don't think you're going to do it this week. You may do it before the month is out, so later in the month. But on a short-term basis here, I think the market's probably at a short-term low, and we may bounce possibly to yesterday's high, not much more. And then we'll probably build some sort of a top pattern and take a shot back down to 482 area. And there we'll probably find a base and start rallying again. So I don't think we're at a long-term high here. I think we're more of a big consolidation, where that consolidation is basically I think I added up to around 4% trading range that may be developing here, where yesterday's high is probably resistance, and the January 31st low is probably support, which is 482. So, and also around the 5,000, 4,000, those round numbers, but we're around that 5,000 level. So I'm thinking we're going to have some back and forth around.
Perfect,
So
yeah.
I hear the music.
Yeah, Tim, please hang right there. Folks will be right back with Tim Ord of the Ord Oracle.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
All right, welcome back, folks. This is Jacob Shoup filling in for Tom O'Brien, and we are live with Tim Ord of the Ord Oracle. Tim, are you still with us?
Yep, I'm right here. So
fantastic. So we were just looking at 8, which was the replacement for 4. That was the VIX. So, do you have anything else to say on this one, or do we need to move to chart 5?
I don't know. Do you have any questions? I'm just what I'm measuring is the acceleration of the VIX, and that's panic, and that's what I'm trying to point out here, that we got enough panic in the market to, at least on a short-term basis, to produce a rally that may rally into Friday or something. So, but I think the bigger trend, we're starting a trading range where, again, it would be right above that 5,000 level down to 482. Or not 500 level, 502 on the SPYs, and the support around 482. Mm-hmm. I think we may bounce around in that area for a while. I don't know how long, but that does not end the bull market. I think the bull market, I think we still, in general, have a 10% more to go before the year is out to the upside. So this is not, a time to be short, other than I trade back down to 482. So, anyhow, do you have any questions? Or
no, and honestly, Tim, that's why I love filling in on days that you're here, because you explain things just so simply, right? I mean, it's complex stuff, but I mean, totally. I mean, that was all pretty concise. So.
Okay, well, we'll see if it works out or not, but that's my opinion for right now. We'll see how it works out. But,
sure.
But I think there's really nothing serious here. The serious thing would be if we didn't see any panics in anything. And, we got a trend right now, 1.25. It's been a lot higher today than that. But, it's I like to see it higher, and that may come on a close. I don't know. But anything above 1.2 on a down day it leans bullish. If we had a big down day and the trend was, say, 0.8 or 0.7, that would be a sign of trouble. Right. Because that would probably mean we're going to go down until that trend starts to, gets above 1.2. So, anyhow, to me, I think we're okay. Market can prove me wrong for sure, but anyhow, we can move on, or we can discuss this more.
Yeah, why don't we check out what we have on chart 5 currently? Unless, if there's any questions, too, you have for Tim, guys in the den, go ahead and message them to me, and I can also bring them up to him as well. Just throwing that out there for everyone, and we'll wait for those to come in. But we can move to chart 5 in the meantime, if you're all right with that, Tim.
Yep, we can have. Actually, this is an inflation-deflation ratio. Martin Pring bought this indicator, I don't know how long it's been out, but he's the inventor of this. Well, actually, I don't know if you never used it this way. I use it, but I use it with an RSI, and this is I think the daily chart. Yeah, this is a daily. I'm also going to show a weekly time frame too. But the second window down from the top is in the daily inflation-deflation ratio, and the top window is the RSI for this ratio, and works the same way. If it moves any indicator moves too fast, too quick, one direction, usually you're at most time either a high or a low. On this case, I took the RSI, anything below 30 on this ratio. So when this ratio really dives down is when you get the signals. And the bottom window is GDX, next window up is the XAU. And we actually got a signal last week on this indicator. And so even though we're down 5% today or thereabouts, this indicator can be off a little bit, like a week or so. So I don't think we're starting a big decline here. But since the daily inflation-deflation ratio is bullish, and it was bullish late last week, I think we're still okay because, especially with GDX, a lot of times GDX trolls a lot of these indicators. But if you flip to chart 6, this is the weekly inflation-deflation ratio, and it's also producing a signal. It's pretty rare to get the daily and the weekly to have signals at the same time, and this is one of those times it's doing it. And this chart goes back to 2016 and shows all the times the RSI of the inflation-deflation ratio getting below 30 and turning up, which it did last week. And even though we're off 5%, I think there's just kind of a shakeout going on here. So I don't think this is the start of decline. I think we're pretty much ending of a decline. And it works pretty well. It also works when the RSI gets above 70 on this ratio, especially on a weekly time frame, which is those red lines across there. You usually at some sort of a high. And so I'm thinking we had last time we got a signal was in October. Now we're getting another one, and pretty much close to the same level, even though we're down a little bit from it. Matter of fact, if you look at GDX, we really haven't changed much from last August. Things just going sideways here, and it's still generating bullish signals. If it's generating bearish signals going sideways, that would be a problem. But we're not. We're generating the bullish signals, so I'm still thinking we're probably basing it here. And if you flip to chart 7...
Yes, and everyone's asking about the GDX as well in the den, too, so...
Okay. This is kind of unusual. I should have probably took this chart back, but we're down, I don't know when I did this chart, around 5% or better. And both those indicators, normally when you get above minus 10, which we did a couple of days ago, on the bottom window, I guess you defined it. The bottom one was GDX up-down volume with an 18-day average. The next window up is GDX advanced decline with an 18-day average. And even though the GDX has moved down, this indicator has moved up. And so there's a positive divergence going on, but the rally really doesn't get going until both indicators, or at least one of them, gets above minus 10 and stays above minus 10. What's unusual here, these two indicators are not really backing off much below minus 10, even though we're off 5% today. So I'm thinking it's kind of a shakeout thing going on. I don't think on the bigger time frames, this is like it's going to continue down. I'm thinking, especially with, if the weekly was more near a sell signal than a buy signal, I think that would be worrisome. But that's the opposite. We got the daily and the weekly both generating buy signal, and we're still down 5% today. But that kind of, with those two indicators, the RSI probably today will be even lower than it was a couple of days ago, signaling that, this is probably still low. So how low is low? Where's the thing ending? I assume would be right around in this vicinity because I'm not seeing I see a positive divergence, especially on this indicator on chart 7. As the market moved down, this indicator was going up, showing that actually the advanced decline is getting stronger and the actually up-down volume is getting stronger. So there must be something in GDX, one stock, that's doing most of the damage in there. Sure. Is probably what it's telling me. So we'll have to wait and see.
Yeah, and really that was going to be my question too. When we've been speaking, that's what we kind of talk about, right? The GDX is just not moving a lot. It doesn't have a lot of action. And then, today we do have a down movement, something about 5% on some volume, right? And I was going to ask what would exist essentially that could indicate that this is actually a bullish signal, but you actually did answer that. So thank you, Tim.
All right.
Absolutely. Tim, thank you so much for coming on. We enjoy it every time. Guys, that is Tim Ord of the Ord Oracle. That is ord-oracle.com. Go give it a check out. Tim, thank you so much for joining us today.
All right. I'll see you Wednesday, or see you Thursday.
See you Thursday, Tim. Okay, folks, stay tuned. We'll be right back.
Are you ready to take your trading to the next level? Introducing Tom O'Brien's award-winning newsletter, Market Insights, your key to successful active trading. Tom O'Brien, renowned for his expertise in the financial markets, has designed Market Insights to be your daily guide to profitable trades. Tom publishes his daily Market Insights newsletter every market day before the market open, along with updates when warranted. Stay ahead of the game with Tom's real-time analysis and trade recommendations delivered straight to your inbox. Whether you're a seasoned trader or just starting out, Market Insights provides the edge you need to navigate the markets with confidence. Ready to join the ranks of successful traders? Head over to TFNN.com and subscribe to Market Insights today. Don't miss out on this opportunity to supercharge your trading results. Market Insights comes with a 30-day money-back guarantee for all new subscribers, so you have nothing to risk. Don't miss out on this opportunity to revolutionize your trading game. Head over to TFNN.com right now to join the thousands of traders who have already experienced the power of Tom O'Brien's award-winning newsletter, Market Insights, firsthand. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Jacob Shoup filling in for Tom O'Brien. We just spoke with Tim Ord of the Ord Oracle. That is ord-oracle.com. If you missed that interview segment, again, go check out our YouTube in about an hour from now and check out that archive. He always has a lot of really interesting stuff to say. We take a look at, the gold contract right now, trading down in the 2005-50 area, down about 1.35% today. And this is on high volume as well. Take a look at the other precious metals, 286. We have copper down actually not as poorly as everything else, trading at 370. Really, this dollar has a lot to play in it as well, trading at 104.87. Of course, we're seeing a little bit of relief from the highs of the day, but we're still pretty high up there. And it's kind of like, where does this go, and where does inflation go from here? Like I was saying earlier today, it was core inflation that was bad. So it's not easily explained away by these kind of, volatile, as they say, products like energy and food. I'm going to be really looking forward to hearing kind of the next statements from the Fed, because I think it really does push out rate cuts. Do we get as many as we thought this year? I'm not sure with that, right? What do we do about things? I mean, is it insurance in theory probably isn't going to go up much more, right? So you have, maybe that you can rely on. Food away from home, I think, is still going to be pretty expensive. I don't know what they do about housing. Where are these lower rates coming in? Why aren't lower prices coming in with the higher rates? I think there's a lot to kind of pack out about that. This article here, and this is kind of the question it's asking as well. It's like home buyers thought mortgage rates were finally going to go down. Why hasn't it happened yet? Okay. Mortgage rates near 8%. Home buyers eager for good news. Some forecasters have buoyed their hopes, estimating that the rate on 30 mortgage dropped to 6% or lower this year, but rates have not fallen by much. And interesting to see when that actually starts happening and when rents can go down and prices of homes. Folks, thank you so much for joining me today. Love being with you guys and filling in for Tom. He will be back tomorrow. I hope you all have a great evening.